Welcome back. You're watching us here on Editors Roundtable. We're talking about a bunch of things. Prashant spoke about, beyond fourth quarter. Sonia spoke about rural demand, as did Ashwini. But, the last 4 days for the FMCG sector have been worth months of news. If I just take a look at all that's happened, and earnings are one part, beyond earnings also a bunch of things happen. So, as far as the earnings are concerned, we're midway through the FMCG earnings along with the earnings season itself. But we have important trends here. The top of the block this time around, the best results have come by in the first week of the earnings season itself. And they've come in from Nestle, highest growth that the company's posted in a quarter in the last 1 decade. At the same time, Tata Consumer beat expectations across all parameters. So those two were the pick of the season in the FMCG space. Mixed results coming in from HUL, 4% volume growth. Could have done mildly better. Titan as well. They prepared the street for strong growth in the jewelry business, but eyewear margins were a bit of a miss. A complete miss this time around was Dabur. Post the miss on, muted revenue growth of 6% over the last 4 years, you had margins missing estimates as well. The management commentary also did not inspire much confidence. We had brokerage downgrades come by as well. So that is one miss that came by. But what was the, positive surprise were these smaller FMCG companies which were trading sub 25, 20 times price to earnings. Bajaj Consumer, case in point. I mean, 14% growth in their revenues, 80 basis points improvement in margins, as a result of which net profit also double digits, stock trading at 14 times. Jyothy Labs, for the last 4 quarters, the stock has been consistently, performing well every quarter. So 13% revenue growth, 430 basis points expansion in margin, and guess what? 60% jump in their profit after tax as well. So these were the results that came by, but beyond results, the big deal that happened, Godrej Consumer saying, acquiring Raymond's consumer business, Park Avenue DOs, etc. The street is concerned about why Park Avenue DOs when you can start your own Synthol brand, or why pay top dollar, as a result of which, why pay so much valuation for it as well? And when do you get that money back? What's the scalability out there? The other one, Nestle, we spoke to the management and everyone's, talking about Ching's acquisition. They said everything's still on the table, nothing's off the table. So that's something we'll be monitoring. In fact, that is something that we'll be monitoring as a theme for the FMCG sector in this year itself. One is margin expansion because raw material prices are coming off, volume is picking up, and second is M&A because our company is now chasing growth via the inorganic route because rural demand is just showing gradual recovery. For all of this, we're looking at valuations. FMCG never traded cheap, but currently it's actually pretty much in line with the 10-year average. So it's not very expensive either compared to its 10-year average. And the ones which are, priced cheaper are actually outperforming. So is there a case for some shift in to the B zone FMCG players, the kinds of Bajaj Consumer, Jyothy Lab? Imami is one of them. So that's something we'll watch.
At least for this quarter, you know what they said, Mangalam, Jyothy and Bajaj, apna time.
Apna time aayega is what they said. Sorry.
But next time you talk about noodles and all, you better get us some. You can't just talk about it and get us all hungry and then not come with a plate of Maggi.
Nigel and I had noodles just before the show.
Plate just before the show.
Thanks for not sharing with us.
I told Nigel. Nigel presumed that Sonia will care about
diet and she'll be having those
organic.
I think what we need to do is get Nigel into the studio. I think there's too much fun happening outside.
The fun's best always outside the studio, right?
Let's get in Ashwini's comment on this FMCG pack before we wind down. Ashwini, Mangalam put together the numbers. What's your view?
Nigel, the way I think about FMCG is that there are 3 drivers for the FMCG story in the next 1 or 2 years. One is restoration of gross margins. Pretty much across the board, all companies have seen significant compression in gross margins over the last couple of years because of cost pressures, whether it's food prices, whether it's oils, whether it's energy, all of that, right? So for example, Hindustan Unilever gross margins have compressed by as much as 10 percentage points in a span of about 2 years. So some of that catch-up is definitely going to happen. That's going to be a big tailwind. Second is what happens to rural markets. The jury is out there. Some people are seeing a small recovery. El Nino, who knows what that does, if it shows up or it doesn't. Those are question marks that I really don't have an answer to. And the third big driver is the competitive intensity, especially with Reliance trying to muscle its way into the consumer space. So looking at all of this, I would seek comfort in valuations. especially because the margin tailwind story is going to be universal across all the stocks. So, like you mentioned, some of the smaller companies which are trading at undemanding valuations have also seen a margin improvement. And given that that's more of a universal thing across the sector, it probably gives you room for earning surprises as compared to the large caps. Also, while the valuations are in line with what the last 10-year averages are, if you stretch the horizon a little bit and look at the last 3 decades of valuations, the consumer stocks actually are very expensive. And they've delivered growth and consistency in growth as well as free cash flows, but growth of about 10 to 15%, trading at 40, 50 multiples, this doesn't go down well with me. I'm a value investor. I could be wrong, but that's just how I am. So I don't feel excited by the frontline consumer stocks, notwithstanding the raw material tailwind. And I would look for value elsewhere. But those are the drivers, and that's how I think about it.
Okay, well, Ashwini, we'll wrap up on that note. Thanks a lot for joining us. You have a great weekend. All our viewers wishing you a happy weekend, and to all our editors as well. I hope I don't bump into you guys this weekend. I've seen so much of you this week.
Don't want to see you all post the show. See you Monday morning.
Only Monday morning, guys. All right, have a good one, and thanks a lot for watching.